So I'll stop there. Hopefully all of you managed to keep up with that. Been talking for a good 40 minutes. I'd like to open the floor to questions. I'm sure Adam has a few as well. But if you'd like to just basically raise your hand or write in the chat, I'll ask Adam or Sven to just read out any questions as they come.
Yeah, one question I've had actually, Tim, before the webinar is, a lot of expats, well, not a lot, but some expats do actually still have UK PLC companies, not just British people, but our expats. And obviously some people also, not as many people, but have like trusts, for example, UK trusts or offshore trusts. And a lot of people have heard, of course, that it can be tax advantageous to buy through a PLC company, potentially. Yep. What's your feelings about buying UK property through a trust or a company structure, like a UK PLC company structure?
Perfect. So really good question to be asking. With all of us being located overseas, tax is a big consideration. And part of my role, a lot of what Adam will ask of me as well, is that I ensure any kind of purchase or transaction we make is the most tax efficient possible. So with that, essentially, it will come down to the individual clients. Mortgages and banks view different people differently, but essentially they are very hospitable. And when it comes to a company structure versus a personal structure, the company structure has a lot of tax benefits. I normally recommend a company structure if you're not British, because it affords you a lot of the tax benefits that British expats will have simply by holding that British passport. They're both very equally matched. Essentially, what it comes down to is we'll look at the mortgage rate. So if the mortgage rate is better for a personal name over a company structure, that's a conversation we can have. If they're relatively similar, then the company structure is something that I'd recommend. But again, we'll do that on a case-to-case basis, but it's a good option to have and one that has helped a lot of people save a good amount of money.
Yeah, thanks, Tim.
Okay, I'll leave my screen shared. Adam or Sven, if there's any other questions that pop up, do let me know. As well, for people that are on the call today, if you'd like to share your experience of property, or if you'd just like to give a bit of information on your background, say which country you're from, I can always provide my insight onto what it looks like investing from that place. Generally speaking, the mortgages are very hospitable. It's never really a case of you won't have a mortgage option. It's more of a case of how many options you have. Certain countries are viewed a bit more favorably by banks, but for the most part, all countries will have an option. Just stop my share for a moment. Let me, apologies, get that back up. Adam, anything else that's kind of popped up in your dealings with your clients that I guess you could qualify as a frequently asked question?
Well, I think the mortgage question gets asked a lot. A lot of people assume if they're in a developing country or a poor country, it's harder to get a mortgage. It might be a bit harder, but I think the last person we helped was in Central Africa, and it was fine, right, to get the mortgage. I think another thing is the typical size of the deposit, and also how much the interest rates are approximately. I think those two things come up quite a lot. Obviously, it always varies, right? But just the typical basics on that.
Perfect. Yeah. Well, again, good question to ask. So hopefully, as you saw on my presentation, the important thing is there's a range of investment options when it comes to price point. Generally, I say as a golden rule of thumb, the minimum amount to cover all of your associated costs, we're looking at around 50 to 55,000 pounds, which sits around the 70,000 US dollar and above mark. Apologies if you're working in another currency, but they're the two that we look to focus on. So you're looking at that kind of investment amount, £50,000 and above. How it works with the interest rate. So again, the interest rates will depend slightly on personal circumstances. For the most part, in 99% of my dealings, the goal is that the property rental price will always cover your mortgage and any other associated costs. So, for example, your monthly mortgage, it's always covered by the tenant who is renting it. We do a lot of due diligence and research to ensure that the markets that we're working in are buoyant and stable enough to cover any associated costs, including the mortgage. And basically what we look to do is ensure you're net neutral. So you purchase the asset, you contribute your £55,000, and the idea is in 99% of cases, you'll never have to put another penny or cent into that investment. It will sit there. The mortgage will get paid each month by the tenant. And then essentially the mortgage amount decreases every year as your tenant chips away. And the property price value increases every year in line with the market. So essentially, you're looking at a position where your net monthly income increases each year as rental prices increase and also as your mortgage amount decreases. And then the big picture, as mentioned earlier, is that capital appreciation. So at the same time, your property price is increasing each year. The markets that we work in, so Manchester and Birmingham, for example, they're not our only markets, but they're two of our key markets. You're looking at an average capital appreciation of around between 4 and 6% each year. Historically, over the last half decade, both cities have outperformed that. But to be a bit more realistic, you're looking at around a 5% property price increase. What I've said and those numbers, they kind of dictate what you'd expect. The longer you hold the asset, the better it performs. With the UK, as I mentioned as well, you're looking at a 10 to 15 year cycle for the average property price to double. And that's really where the leverage model starts to turn a lot of heads. If you can hold that property for 12, 15 years, generally speaking, the property is doubled in value, but the amount that you've contributed towards that investment always stays the same. So initially, you're looking at, say, a £200,000 property, a £50,000 investment over 15 years. That doubles, but your capital investment always stays the same. So when you come to exit the property and sell it, your £50,000 investment is now worth anywhere up to £400,000 from 12 to 15 years later. And that really, to just kind of drive it home, that's a big reason that people look at property. It's an asset you can invest in, you can leave it there as a cornerstone of your portfolio, and then 10, 15, 20 years down the line, you're in a position where you've got a massive lump sum asset and you can do with that what you will. A lot of people, once they've paid off the mortgage, they choose to just have that property there to provide them with a monthly income. Others choose to sell the property, draw down, and you've now got a big pension fund that you can do with do what you wish with. I think we've covered a good amount. I'm conscious I've spoken at all of you for a long time, so feel free to follow up with Adam afterwards if there's any questions or any points that you'd like recovered. We have recorded this presentation, so for those of you that have just joined recently, or for those of you who I guess aren't here and aren't listening to me, we can get a recording out to you as well. But generally speaking, the next steps are whatever you'd like them to be. Ideally, the best way of kind of proceeding is to schedule a call with Adam and myself, and we can give a bit more of a tailored approach to the investing side. Alternatively, for those of you who are still a bit on the fence, feel free to reach out to Adam with your questions or information you need. We can converse over email and proceed that way. Anything else you'd like to add, Adam, or any closing statements before we part ways?
No, not really, Tim. Just exactly what you said just then. If you've got any questions, you can contact me directly as well. Thanks for joining, and obviously for the people who are seeing this recording as well, the same thing as well. You can reach out to me or Tim.
Perfect. Well, yeah, thank you so much for your time, everyone. Look forward to speaking with you all individually, and I hope you all have a good afternoon, morning, evening, depending on